Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so here we have Bitcoin on the 4-hour. This is the Bitfinex chart, and you'll see basically we had got that powerful move up after that little spring to the downside here. We found support at the bottom of that channel, move all the way up to the top of the channel here in purple, and then we've just been flagging out inside this range. And essentially we have these two upward sloping supports. The one is going from the wicks all the way here, and the other is going from the candle closes in green here. And you'll see we're essentially come down now for our fourth actually, I'm sorry, test of this bottom little upward sloping trend line, and we've started to find a little bit of support. What I would expect to happen here, like always, is it would continue to act as support until it doesn't. So this is a good place to be taking a like short-term little scalp to the upside, essentially based on just support resistance. You could count on, the move from where we're at right now to the top of the range, another 4% stab back up here, take profits on part of the position, and then leave part of the position open for a potential breakout situation, or invalidation of this top little support area, because we really only have like one, two, sort of a third time up here. So but again, that's not financial advice, just a small little way you could essentially manage off of an existing support point. But again, I mean, you could just trade it, with the stop loss, tight little stop loss underneath here. If you get a close basically underneath that position, at the 9,000 range or 9,100 range or whatever you want to do, you close out that position and assume you're wrong, and we're going to test back to downside, probably closer somewhere around here in the 8,500 range. So but I do want to zoom out on this a little bit and kind of get that big picture view, because again, we're inside of basically this purple pattern here. Even after we had got the breakdown out of the triangle we've been forming, we stayed inside this channel, and we've gotten confirmed touches multiple times on the bottom and multiple times on the top. We did have like one attempt basically to try to get out of there that failed, and again, depending on what exchange you look at, that's going to take that wick's going to be in a different position. But you'll see we ran into the green resistance on the way up, as well as the purple resistance on the way down, and we tested it exactly at the cross. So things like that are not coincidental. It's important to look for confluence levels and see, because that's often when you see like a move like that will happen, it'll line up with multiple things, and you could have had a better idea when that move was going to take place. So here we got this move up here after testing the bottom of the range so many times. We came up to the top of the range, and we're just doing the exact same thing. We tested the bottom of the range countless times here, tried to stab up, couldn't do it, and then finally got the big move up. So now what I would expect to happen is basically we just keep testing in here, and then finally if that doesn't break, we'll just test right back down to the middle of the range, probably to the 0.5 here again, and see if it's going to act as support now, because the first time we came to it, we dropped straight through it. We got above it once and it couldn't really hold support at all, and we fell back down to lower prices, and then the 618 got front run. So now we got the bounce all the way back up to the 382. The 382 is acting as resistance now. We're also in that downward sloping channel, so without a change in trend, I would expect us basically to sell off, come back down here and test the 0.5 as support. If the 0.5 doesn't hold as support, we come all the way back down here and we get the official test of the 618, which in many cases was front run. And I think if that holds this time, then we can potentially start moving to the upside. If it doesn't hold, we need to start potentially looking at lower targets down here to the 786 in like the $5,500 range, again depending on what exchange you are looking at. Also, staying inside of this purple channel is not unrealistic if you start taking into account like time frames. You know what I mean? We basically spent from January till June in that upward sloping, basically just like bull market, bull run, whatever. So it's not unrealistic to think that we could continue along in this consolidating and then finally get a move to the upside, once the reaccumulation has taken place, etc. But you'll see I like to look for symmetry, and you'll see we're starting to form like a boomerang pattern here. If we stay inside this purple a little bit longer here, we maybe make it over to this fib circle over here, and then we're likely to get the reaction because that fib circle is based off of the swing level right here. So, but that's still a little ways in. So we could essentially just move and stay in this range consolidating here, and then basically get our breakout at that fib circle right there, or we could get our move back down here and then later on invalidate that as the swing, which happens often. You'll see confluence with these fib circles, and then you'll invalidate the swing low, you'll move it, and then you'll see confluence again. So you'll see people will have these, and they'll have it like right here, and you'll see all kinds of little, confluence points with the tip up here, and down here you'll find support or whatever. And then now look, it got invalidated, got a new swing low, you move it over here, and now look, oh look, still has confluence with these points. It broke down at this level. So it's important you look at some of this stuff a little more subjectively than others. Things like fib circles, for instance, can look good at the time, and then later on you look back at it and you realize that it was not correct. You know what I mean? But it doesn't mean that it's not going to be functional, because if other people are doing the same thing you're doing, potentially looking something as a swing, even if it later becomes invalidated, it doesn't mean you weren't able to trade it successfully. So, but there you have it. Just want to take like a little bit of a zoomed out kind of look at everything and see there is a lot of resistance and support. It's important we look at the stuff that goes back the furthest as the strongest. So, we can see kind of where these fib levels are from, these orange fib levels from this move up here, and kind of get a better idea as to, what important areas we might be reacting in. And then also this channel that we have been consolidating inside of, again, until we break out of it, I'm just going to assume that that's going to hold. And what that means is that there's about a 4% potential move here to the upside of the channel, but the real trades are going to be to the downside, because you could stay inside the channel now after that move up and still be getting essentially like 24% moves. So it doesn't make much sense to be taking longs to the upside until we see a validated break of this channel, like a potential like longer term candle close above this, not just a wick coming up and then getting strongly rejected. Once we do see something like that, we can look at that as potentially a change in trend, and then we can start taking trades to the upside as we start to take out like previous highs, and we start putting in a higher high followed by a higher low. But as of now, we are continuing in this downtrend, putting in a series of lows, lower low, lower low, lower low, and then high, lower high, lower high, lower high, lower high. So until we're able to take out one of these lower highs and start, essentially changing the direction of the trend back to a, uptrend, we're going to look at this as a basically long-term descending consolidation pattern inside of this, basically just channel. So the next move we're looking for is probably going to be in the 20 something percent range, or at least 10 to 12% range, to retest like the mid portion of this channel here, and probably retest the 0.5 fib level. But again, if we do see the move up to the upside here with a lot of volume, and we do get the breakout, then by all means, we'll switch back to a bullish longer term point of view as we start taking out some of the important resistances. But again, if you look at the Stoke slope on the 4-hour, we're in a downtrend. If you look at the Fisher, we're in a downtrend, and water explosion is above the explosion line, and is showing negative volume. But this is a potential reverse point. We are hitting the green line here on the Fisher. That's an area we often reverse off of. We're also real close to the little purple line here at the 20 on the Stoke slope, which is often a reversal, and we are right at that, basically double confluence level, depending if you're looking at candle closes or wicks, for a potential bounce right here. But again, you're looking at a potential 4% move up here. So with the 1% tight little stop loss, you could have a potential scalp trade there. But again, it just makes a lot more sense for me here, that if you want to trade this range, that you're going to be taking shorts off the top of the range rather than taking longs off the bottom of the range. But if you are in fact like biased to the upside, or you're potentially just positioning yourself, for the big move that's going to occur, it does make sense to take shorts off the top of the range and longs off the bottom of the range. But you can't just look at this tiny little consolidation pattern. You have to look at the overall pattern that we're inside of. Because if you're looking at the consolidation pattern right here, this little flag that we're in, it looks like we're at the bottom of the range. So taking a long here looks great because you're zoomed in and you're only thinking, oh yeah, 5% to the upside potential move. But more realistically, you need to pay attention to the overall pattern that we've been in and the longer time frames. And you can see that we're at the top of this range, basically within 4% of it, and there's potentially like another 20% to the downside. So we're in the top 20%. There's 80% more that can move here. So it doesn't make much sense to be taking longer term trades up here in the top. It would make sense to be shorting off the top resistance area and then longing off the bottom support area, and then using that in confluence with the different fib levels. So even if we do potentially get the move back up and rejection off the 382, the real trade is probably going to be back down to the 0.5 at 8,500, and then depending on how that reacts and what happens there, potentially coming back down here to the $7,200 range. All right, guys, that's it for today. Bitcoin, a little bit of a different view on it, and not financial advice, but sort of like trade setup ideas, and also just making sure that you're paying attention to the big picture. All right, guys, that's Bitcoin Bitfinex chart 4 hour, and I'm Crypto Trend Trader signing off.